Hi, good evening, everyone. Welcome to the WealthAbility Live. So it's still our Monday live show. Today we're talking about the mid-year tax planning. So it's around October, and it's about 6 months, less than 6 months till the 17-18 tax year end. So today we're going to talk about something you probably need to consider at this point to avoid some end of year or last minute horror stories. Of course, at the moment it's very close to Halloween, and there are lots of signs or stuff talking about horror stories, anything like that. So I just take this opportunity and use this quote. The reason why is lots of people, they perhaps when they sort of overlook things during the tax year and they didn't take actions or some allowances they missed, and 9 months after the year end, when they themselves or the accountant run the tax return, and there are things they realize they missed out. It comes about a high tax bill. So it's just things you need to be aware of, especially at this point in time, that to avoid the last minute horror story. Okay, so today I'm going to talk about some allowances, but of course there are some other things we need to consider, which I will cover in the next few sections. Of course, the major, I just keep things simple at the moment. There are 3 major allowances you need to consider at this point. There are other stuff that you need to consider too. Depends on the situation. Say, if you're self-employed, is that a point in time where you think your business is really taking over, and you can consider restructure your business to save some tax? Or if you are running the property, you have a buy-to-let property, because current tax year, the property tax rule has changed. Is your income is likely to go about 40% threshold? So that's a point you need to consider. Is that something you need to do to avoid this? And of course, if you're self-employed, you always need to look at the tax deductions. So these are like small things and standard things you need to consider. But today I'm talking about 3 things you can consider at this point in time, despite your situation, either you're employed, self-employed, or if you're running the company. So there are 3 things you can consider. Of course, just before we start, just make sure you're aware, I'm actually starting my webinar series. It's a 6-month program, which there are people signed up for. But today, because it's the first one, I'm open to share the first webinar to the public. So if you're interested in, I have the link in the description where I'll talk more about the tax allowances for 17-18 in more details. So how you can maximize that and how you can even utilize that to make your money grow. Okay, so later I'll talk a little bit more. But then at the moment, let's just go straight to the content. Okay, so the first thing, I think all these 3 things, I put them in the order where first, second, and third, like you need to consider. You don't have to consider all of them, but I would say the lowest risk as well as the most essential consider first, and then we come up the second, and then the third maybe slightly high risk, and then you can consider when you have the capacity or you can afford to do so. Okay, so first of all, it's something I think everyone can afford to do if you're really committed, despite your income level. That is really the pension contribution. So at the moment, if you're on the 20% threshold, and every £80 you invest in your pension pot, the taxman will make it bigger. We top up £20. So effectively, that's 25% return. No other investment will give that as good return, and it's very stable as well as pension contribution. So despite your income level, you will always need to consider this. of course, most of the small businesses at the moment, it's now become an obligation for employers to contribute pension to their most employees, if you are sort of an eligible worker. But for this kind of contribution, it's funding your retirement and it's funding your future. So it doesn't require a lot of money to do so, even if you just like invest, say, £15, £20, you can just easily save by squeezing some of other stuff. Most popular thing is just if you buy a fewer cups of coffee, like takeaway coffee or something, that you can squeeze that amount of money. That's effectively funding your future. So not just it gives you 25% or even more return, but also it's for your retirement. We all want to still have a good lifestyle at the retirement age. So that is something, first of all, everyone can afford to do, and everyone should consider the first, despite your income level. Okay, so that's a pension contribution. It does give you very good tax relief. And the second thing, if you do have some capacity and consider some savings, which again, everyone can afford to do if you just do some savings. So that is the ISA. At the moment, for this tax year, you can invest up to 20 grand worth of funds into ISA wrapper. So you can do like cash ISA as well as a stocks and shares ISA. So anything like interest or the dividends you earn from that ISA wrapper, that is tax-free as well. So if you consider some savings, yes, do consider open the ISA. And if you do want to have some investment in it, yes, stocks and shares ISA, that's something it's worth considering. Again, you don't have to have a lot of money in order to start saving, but even every small bit, especially when you are considering some emergency funds, which you want to put aside some amount of money, say 3 months of living expense or whatever you can afford to save, and into the cash ISA. One thing, it's easily accessible. If you really do have some emergency, it's accessible. And the second thing, the interest in it is tax-free. And if you do consider start investing, yes, stocks and shares ISA, that's a good start as well. You get a tax-free investment in it. So that's something, if you can afford to do, either cash or investment ISA. So something doesn't require significant amount of money, and if you are able to afford to do, then yes, that's a way to go. Okay, so the third thing, of course, like pension and ISA, it doesn't require a lot of money. The third thing, it does give you very lucrative tax relief, but it does require some amount of money, and of course, it's relatively high risk, but the reward is really good. So that is venture capital trust. How it works is really every £10,000 you invest in venture capital trust, you get £3,000 as a tax relief. So you literally get the cash back from the government. That is a very generous tax relief. Perhaps for some people it might be too good to be true. Actually, I've done episode just with a financial advisor just around venture capital trust investment. In the separate episode, we have talked about this in more details. So be free to check out my YouTube channel, where you can find one of the episodes where I did talk about venture capital trust. So it's actually a government scheme, and where the money goes is it goes to UK startup companies, like small businesses. So yes, it's really the government give you some incentive. It's a government incentive to encourage people to invest in UK small businesses, because these are the businesses, they are very ambitious. They have like different ideas. They have a better solutions. They are developing better solutions to solve people's problems. So government want to boost the prosperity. So they want these companies to grow. Of course, running a business is not always easy. Most of small business owners, they have a brilliant idea, but they might need a certain amount of capital. So that's how a venture capital trust they can provide this. Of course, it is an investment. It is an incentive for the investors. If you are able to afford to invest, then that's something you can consider. Especially if you're earning more than 100K as an employee, or if you for some reason you cannot form a company to run your business, you have to be a sole trader, but you earn quite a significant amount of profit. So that's something you can consider. To get this sort of a generous tax relief. But the downside, you are investing in the business, so small businesses, it's not always stable. It can be quite risky as well. So that's a risk you need to consider. And of course, there are venture capital trust funds, like fund manager. They do all the due diligence. They do all the check, so they can somehow mitigate these risks. But again, uncertainty is always there. So if you are looking to seek for any sort of investment, especially if you want to invest a significant amount of cash, do seek for professional advice, and like the financial advisor, they can these guys can really analyze your risk profile, and of course there are different kinds of investment out there. It is not a good idea to put all your money into venture capital trust. So you do need to spread out your investments to make sure when one goes down and you still have something else to back up. So yes, if you are looking for investing this kind of a scheme, then do need to seek for professional advice. But of course, the upside is if you are able to afford to do, then yes, that's something you can consider. And one other thing is once you invested, then the money will tied up at least 5 or 6 years. So if you have some immediate cash needs, even if you are able to afford to do financially, but if you do require a certain amount of cash immediately, then that is not something for you either. But if you are looking for, if you have some, can afford to park some cash for long term for at least 5 or 6 years, then that's something you can consider. And when the company grow, if the small companies, they grow, they pay dividends, the dividends you get is tax free as well. So there's a reward, and there's also the risk. So pension contribution, ISA, as well as a venture capital trust, these are the 3 major things you can start considering if you haven't done so at this point in time. What we want to do is, because this kind of investment, you can invest bits monthly. I think for venture capital trust, depends on, one of the fund manager I know, they do, you can do the investments monthly. Pension you can do monthly as well, and ISA you can also put aside small bits monthly. So of course all these things you can put bits every month, but then you never know when quite a few months comes by, everything will be compounding, and the power of companies it's something really help your money to grow. So yes, these are the 3 major things. Especially the first 2, almost everyone can afford to do, and it's worth considering at this point in time. Okay, so that's the 3 major things. Of course, there are other bits, depends on your situation. Things like if you're an employee, have you made sure your tax code is correct? If your tax code is incorrect, especially if you're undertaxed, say if you are like earning 70K, but your tax code is BR, which is everything you earn take only 20%, so you are under tax. So we want to avoid some sort of last minute surprise. If in the end, like 9 months after the year end, the tax return comes, in the end you earn like 3 or 4 grand tax, which you cannot afford to pay. So that's something you need to be aware of. So do check your tax code if you're on PAYE. And other things like if you're self-employed, do think about your business. If the business is really start taking over, taking off, and if at some point you can consider restructure, or always look out for the tax deductions, so don't miss out most of it. And of course, I do have this sort of tax deductions, especially for home-based business, in my other videos. Be free to check out. Yes, so basically today I'm going to these 3 kinds of strategy or the allowances it's worth considering at this point in time for your personal tax, to avoid any last minute surprise, last minute horror story. So yes, I hope you find this one useful. And of course, as I mentioned earlier on, I'm running a webinar at 6 p.m. today. It's in Zoom. I already put a link in the description. So it's part of my 6-month program, which I will run 6 webinars for 17-18. Again, all these webinars will cover tax deductions, restructuring, strategy for 100K plus earners. So all these will help you, again, avoid last-minute horror story for your tax bill. So it's the first one tonight. I'm open to everyone, but if you are interested in subscribing to all 6, get access to all 6 program, as well as other bonuses, other bits of other advice, other chances that you can pick my brain, be free to let me know, personal message me, so we can arrange a chat to talk about the program and how you can get access to the rest of the content. Okay, but of course, there's always nothing to lose if you click the link and get into the webinar. But if you are not able to, if you're watching replay and not able to go to the live webinar at 6 p.m. tonight, there will be replay as well. So still, personal message me if you're interested, so I will let you know how you can get access to the replay. The same as if you're watching on YouTube, yes, do direct message me. I'll put my booking link below as well. So click the link, and then you can arrange a chat with me, so I can talk you through how you can get access to the at least the first webinar replay. And then if you find the first webinar useful, you can always let me know, and I can let you know how you can get access to unlock the rest of the content for the 17-18 to help you to plan out your to really get informed with what are the opportunities out there, and to maximize all these opportunities that you feel comfortable, and then avoid any last minute horror story on your tax. Okay, so again, I hope you find this one useful, and have a wonderful evening. If you are coming to the webinar, I will see you later, and have a wonderful evening. Bye now.